We hear the terms trading and investing used interchangeably, so what's the difference? I'm Suzanne with Arvabelle, and in this video we're going to talk about why it's important to determine if you are a trader or if you are an investor. If you're not subscribed already, hit the subscribe button, hit the bell, and we will get right into it. Whether you're trading or investing, the goal of putting money into the stock market is to make money. The amount of time that you're looking to make your profits in is what differentiates trading from investing. There's no absolute timeline on what makes something an investment or a trade, but generally speaking, an investment is when you buy a stock and you hold it for a year or more. That could be 5 years or 10 years, or you could hold it your whole life like Warren Buffett. When you're investing, you're putting money into the stock market for the long term in companies that you also think will be around long term. When you're holding stocks long term, short-term price movements aren't really going to matter as much. You're just looking to make a nice gain 5 or 10 or 20 years down the road. When you're investing, you'll generally choose stocks based on the companies behind the stocks. So you can look into their sales and earnings reports and look into what kind of management that company has. The goal is to find companies and businesses that you think will be around long term. And I will talk more about what to look for in companies in the next video, so make sure that you subscribe. Trading can have various time frames. You could buy a stock and hold it for a month or a week or even a day. Trading is based more on short-term price movements. So when you're trading, you're usually looking for some event or some pattern to continue, and you're saying when this event happens or when this pattern continues, I think that the stock will go here, I'm gonna sell for profit. It's not like investing where you would hold on to it for several years. We can break trading down into a couple of different categories. So first there's swing trading, and that is when you hold a stock for a few months or a week, or I even consider holding a stock overnight or over a weekend to be a swing trade. Some people use the term a little bit differently, but basically it's a short-term trade. Day trading is when you are buying and selling stocks within the same day. Because you are having to sit and watch the charts, it does take a little bit more of your time, and if you're successful at it, it's more like a high-paying desk job, whereas investing is a bit more passive. With investing, you don't have to sit there glued to your screen for 10 years. You can sort of just check up on the stocks that you're invested in every once in a while, maybe when they release earnings or release news about their management. You absolutely can make money day trading, but it is much higher risk. 90% of people that trade lose money. And that doesn't mean that you can't make money. You just have to go into it understanding that the odds are not in your favor. I hate to break it to you, but you probably are not going to become the next overnight penny stock millionaire. And if that is what you are looking to do, that is not trading, that is gambling. Like anything, to be successful at day trading, it's going to take practice, patience, and consistency. It is not a get-rich-quick method, and if you treat it like gambling, you will lose money like you are gambling. If you do want to try out day trading, there are ways that you can test it out without using real money. So TD Ameritrade has their Thinkorswim platform, and you can either open up a real account or you can open up a paper trading account. The paper trading account is a simulation account where you can trade on the real market in real time, but you aren't using real money. It's a simulation. Some people are totally against paper trading, which I do understand because there are emotional obstacles to using real money. But I think that paper trading is good regardless because you can learn the fundamentals and you can make mistakes on it without losing any money. And yes, you will have to learn how to control your emotions with your own money, but you'll already have those fundamentals in place and you won't have to relearn them. If you're like, nah, I don't really want to do that, I just want to use real money, what you could do is open up 2 different accounts and keep your long-term investments separate from your higher risk trading account. If you're consistently making money in your trading account, great, but if you are consistently losing money, you may want to evaluate whether or not it's really worth it to funnel any more money into that, because if it's consistently losing you money, that might not be the best option. So why does it make a difference whether you are investing or trading? With trading, you're trying to profit in a shorter amount of time, so you use more technical analysis or looking at the patterns and short-term price movements. Let's say that you bought Amazon stock and you're not planning on selling it for another 10 or 20 years. You don't really care how many times the price goes up and down this week, as long as in 10 or 20 years, the price has gone up. But if you bought Amazon stock and you want to sell it the next day or the next week, suddenly those smaller price movements are going to become a lot more important. There's this lovely book which breaks down trading and investing a little bit further, and don't hate on For Dummies books, they're good, but it has a section on technical analysis, and there's also a separate book on technical analysis, so I will link both of those down below. Now I will try to visually show you the difference between day trading and investing. Where you buy and sell when you're trading within a day is going to look more like this. Whereas with investing, it's going to look more like this. One of the big differences between trading and investing is that traders set a stop loss. That means that with each trade that they take, they usually have a target price point where they want to sell for profit, but they also have a price point set where if the stock drops below that, they'll go ahead and sell so that they don't lose any more money. Hence the name, a stop loss. With long-term investors, there's usually not a stop loss even when the price drops. They buy more, they view it as a sale, and you're like, what? That makes no sense. So allow me to explain. I did not come up with this analogy, but it is great, so I'm going to use it. We are going to compare long-term investing in stocks like going to the store to buy toilet paper. So you go to the store today and you buy some toilet paper. Then you go back next week and you see that toilet paper is on sale. What do? Well, you probably buy more toilet paper. You're like, wow, I was gonna get this anyways and it's on sale. What a great deal. I'm gonna load up. What are you not going to do when toilet paper is on sale? You're not going to rush back home, gather all the toilet paper in your house, rush back to the store, and try to return it for your money back. That seems pretty stupid when you put it into that context, but that is exactly where people run into trouble when they don't determine whether they are in something for a long-term investment or a short-term trade. A lot of times people will panic sell, so the price will start dropping, and they'll end up selling at the lowest point just because they were afraid that it would go even lower. When in the grand scheme of things, if you're holding on to it for 10 or 20 years, that was probably just a little blip in the price, and the price will probably recover and carry on the way it was going. But why I really wanted to talk about the difference between trading and investing is that depending on what your goal is, if it's short-term or long-term, that is going to change which strategies you use, and it may also make a difference in how you choose your stocks, which is what I'm going to talk about in next week's video. So if you're not subscribed already, hit subscribe, hit the like button if this video was helpful, visit our blog, arvabelle.com, and I will see you in the next video.